Hi guys, Christian here from the MCI Trading Academy, bring you the stock market analysis for the week starting 3rd of October 2022. And guys, we have a crucial week ahead of us. We have a new week, a new month, and a new quarter all starting today. The stock market is at key levels, which means that there's a lot of potential opportunities that we can take advantage of in the weeks and months to come. In terms of today's video, guys, we have a lot of things to go through. Firstly, we'll be discussing the UK and the Bank of England intervention that occurred last week. Guys, we 100% nailed this in last week's video. If you haven't watched that, make sure you go back and watch it. We've predicted that this was going to happen, and I really did hope you took advantage of the big moves that occurred in the GBP last week. Guys, last week we haven't had a lot of technical, a lot of fundamental news, which meant that technicals were at play. I will show you how you could have traded last week's manipulation that occurred in the S&P 500. Guys, we also have a new quarter starting today. I'll be going through the Q3 performance, the performance over the last quarter, and I'll be showing you which companies have performed and have held up the S&P 500 and the stock market. Without those companies, we would have had a massive crash in the stock market. So we'll be going through those. We'll be going through the VIX. And guys, I've identified over the weekend some very crucial setups that could potentially play out this week. If this is going to play out, guys, this is going to be huge for the stock market. So make sure you look out for this. You need to see the analysis that I've done on this, guys. You need to see this. Also, guys, we have a lot of economical news that are coming out this week, so we'll be going through those. As you may be aware, we have earnings season that is starting as of today. And I'll be showing you guys which companies will be reporting this week, and we'll end up the video by doing some analysis and trading setups for the week, and we'll be also going through the expected moves for the month. There's some very interesting levels that you can watch out for in this month, guys. As always, guys, if you do enjoy the video, please don't forget to give us a thumbs up. It does help us a lot. And if you are new to the channel, please consider subscribing. There's a lot of exciting content coming up soon, guys. Now, let's start off by discussing the UK and the Bank of England intervention. And guys, we mentioned this in last week's video. We're discussing how the Bank of England had to intervene due to some bad policies that were introduced by the UK government in prior weeks. Now, the Bank of England did intervene to save the pound and the UK, launching a 65 billion move to calm markets. And you can say to me, perhaps this is something usual. This is something that hasn't had a massive impact on the UK, but this had crucial impact on the UK and the rest of the world, guys. And let me show you this. This is an extract from the Financial Times from a banker based in London. Now, he said this. He said, at some point this morning, okay, meaning on Wednesday morning last week before the Bank of England intervention, at some point this morning, I was worried this was the beginning of the end, said a senior London-based banker, adding that at one point on Wednesday morning, there were no buyers of long-dated UK gilts, UK debt. It was not quite a Lehman moment, but it got closed. Now, guys, I'm not sure if you know, but in what led to the financial crisis in 2008, but it was when the Lehman Brothers filed for bankruptcy overnight. This was the moment the financial crisis started in the US, and it got close to the same happening here in the UK on Wednesday if the Bank of England wouldn't have intervened. So this was crucial, guys. This would have led to the UK pension funds going bankrupt. Perhaps financial institutions would have led. After that, it would have been the domino effect where the whole of the UK and the rest of the world would have fallen at that specific point in time. So the UK, the Bank of England had to intervene. This was huge, guys. Why? because pension funds got margin called at 8 o'clock in the morning on Wednesday morning. So, a couple of hours later, they will have had no funds to sustain their positions and hence will have lost everything. This was huge, guys. Now, let's have a look and see how this will have affected, how this has affected the pound. You can see, guys, the moment the Bank of England has intervened, we had a big upside, okay, a big push to the pound. So I did expect this. I did mention in last week's video, and again, if you haven't watched it, make sure you go back and watch it. I did mention that the if the Bank of England will intervene, then the pound will most likely rally, and this is exactly what happened. So this was huge. Now, all they've done, if they started printing money, they started printing 5 billion a week until 31st of October and dumping this to buy the debt of those pension funds. Now, this doesn't solve the problem. This just extends the problem. So the UK government has now they need to come up with a solution to save the pound. Otherwise, the pound will fall back in again. So this will be interesting over the next couple of weeks, guys. Is the pound going to be saved, or are we going to go back and perhaps go to parity with the dollar? This is something that we have to monitor over the next coming weeks. What I'm looking for in terms of a technical point of view, I'm looking for us to be testing perhaps the 120 level, and then maybe we fall back down and make a new lower low. So very exciting about the pound over the next coming months. So let's stay tuned for this and let's see if we get some good setup. Now, in terms of how you could have played the technical analysis on the S&P 500 last week, guys. Now, we had some decent levels that were taken. So I've been discussing this over the last couple of weeks, how we've had the June low here. We had plenty of liquidity that was resting here. So I was looking and I was targeting for those levels, for this level here to be taken out, for all the liquidity to be grabbed. And that's exactly what happened. Look at this, guys. This was very interesting. What happened last week is that it came right to this level, bounced from here two days in a row, and then the third day it just took out the level. So all is done last week is that it's collected, it's created more liquidity by rejecting this level, and then it went and collected all the liquidity, and then it bounced up. Now it bounced out to do what? To collect even more liquidity. If we switch over to an hourly chart, can you see this? It's collected the liquidity from here, and then it went all the way up on the 1 hour chart, and it collected the liquidity that was resting above those levels. And look at this, guys. Once it's collected the liquidity that was resting above those levels, it's time to consolidate. It's been rejecting those levels. Anytime you see a liquidity being grabbed and then the rejection, the consolidation here, you need to expect that a reversal is coming, and this is exactly what happened. So how you could have played that? You could have bought the S&P 500 once the liquidity was grabbed, and then once it was this liquidity here on the 1 hour chart was also taken, and you have noticed this consolidation here, you could have placed the sell position and target the previous lows, and they would have been the perfect trading setups for you last week, guys. Very usual, very common manipulation done by the market makers there. Now let's look at the performance of companies over the last quarter, guys. And as you guys are aware, we had a red quarter. We finished well into negative territory. Now we had the big players such as Microsoft, Google, and Meta finishing way into negative territories, dropping, close to or more than 10%, till got 11%, Google got 15% in terms of Meta. Now this could have been a lot worse, guys. We could have had a massive crash if it wasn't for Apple Amazon and Tesla, those big players, they held up the stock market. If they will have finished in red territory as well, you can imagine how big of a dump we will have had in the stock market. Now, guys, this is crucial for the quarter coming, for Q4. If in Q4 we manage to have those three big players finishing in green, and we have the likes of Google, Microsoft, Meta, Nvidia perhaps finishing in green on positive territory, this will mean that we can have a big green quarter, a big rally in the final quarter of the year. And what will be the catalyst of that? Earning season, earning their results, guys. If the results will meet expectations or will beat expectations and the full guidance will be the same, then you can imagine that we'll be getting a big rally in Q4. If the earnings disappoint and the forward guidance also disappoints, then you can imagine that nothing will save us having a massive crash in Q4. So there's something to look out for in the month to come. All companies or the big players will be reporting the results in October, guys. So this will be crucial to watch out for this month. Now let's go over and discuss the VIX, and I think this is one of the most important charts to be looking out for this week, guys. I think this is crucial. Now let's first of all look at this. So we'll be talking about the VIX hitting 35 and 35 being a key level, and we'll be discussing how if we'll be going above the level of 35, we'll be having a big capitulation, a big crash in the stock market. Now can you see what happened last week? Last week we literally got close to hitting 35, which is 34.88, and this is exactly when the Bank of England intervened. Is that a coincidence? Maybe yes, maybe not, but I find that very strange to happen at the exact same moment. Now, guys, can you see there's one thing that I've been looking at which I found very interesting, which is this here. The last time we finished the week as a doji, we had a massive dump in the VIX, which meant that we had a massive rally in the stock market, which was when the 13th of June, the week ending, the week starting, 13th of June, and the stock market bottom was 16th of June or so. And can you see last week we finished exactly as a doji. Now I know we've just opened up higher here, but we can easily drop and go back all the way to 20. So watch the VIX this week, guys. This is, I think, the most important chart to look at. If we drop in again here, maybe that was the bottom in the stock market, and then we rally for the rest of the year, guys. This is crucial. However, if we lose this level and we close above 35, then perhaps we go all the way up to into 40s or 45s, and that's when we get capitulation in the stock market. Now we are at extreme levels. Now we are at extreme fear in the stock market. Also, by looking at the fear and greed index here, we are at extreme fear, guys. We are at 17. We dropped as low as 11 last week. So we are at extreme levels, which does bode in well with a relief rally or a short squeeze in the stock market, and certainly VIX can help us with that. So make sure that you watch out for that, guys. I think it's going to be crucial to look out for the weeks to come. If we are to get a rejection of this level and we start selling off from here, then that will support the US 500 and the stock market to rally to some really key levels I'll be going through in just a second. Now, before I go into the charts, guys, I just wanted to show you first of all the economic calendar. So guys, in terms of news this week, the most important news to look out will be on Friday. will be on Friday with the non-farm payrolls in the US. This is one of the most important things to be looking out for the week. Now, this will indicate a number of things. We have a forecast of 250K of new job openings in the US. If the number comes in as expected or higher, it means the US economy is very, very strong, which means that the Fed can raise and keep interest rates higher for longer, which will hurt the stock market. If this comes in lower or perhaps a lot lower or even negative, it means that companies have started to lay off people and not replace them, which means that we are heading into perhaps a recession, which may indicate that the Federal Reserve has to either stop the interest rates, stop with the hike of interest rates, or even start to lower them. So that will be interesting to see, guys. This level will be crucial here. In terms of the earnings season, okay, so in terms of companies reporting this week, guys, now there's not a lot of companies reporting this week. There's a number of them, just a few of them actually, which I don't believe they will have a big effect on the stock market. So there's nothing to watch out for in terms of earnings season, guys, in terms of earnings this week. Next week is when the real earnings start. And just before I go into the charts, guys, I just want to show you in terms of a couple of things, a couple of interesting articles I've been reading. First of all, look at this. Okay, the inflation in Sri Lanka is 69.8%. Now, you thought you have it bad here in the UK, in Europe, or in the US, with inflation being close to 10% or so. Sri Lanka has it a lot worse than we and you have it wherever you are in the world, if you are not in that part of the world. So it can get a lot worse, guys. Okay, so I think we have it quite okay here in Europe. Now, the next thing I wanted to show you is Credit Suisse here. Now, their shares have fallen to a record low because they have a lot of troubles, guys. Now, we've been talking a lot about a capitulation in the stock market, and that when capitulation happens, it's normally because of some event that happens. Now, that event can be the collapse of Credit Suisse. Okay, this seems to be the huge issue nowadays. If Credit Suisse collapses, the whole financial system will follow, and we'll have a big collapse. We'll have a big financial crisis, guys. So monitor this story here. I think it will be very interesting to see. And if this is going to it's going to happen, if they are going to not come up with a solution to their issues here, I think this is going to be crucial, and this will have a massive impact on the stock market. So monitor this story here, because they are, as I mentioned here, they are at a critical moment. So this will be very interesting to see over the next coming weeks. Now, let's start off by looking at the charts. And I just wanted to start off with the US 500 here for a second, guys. We are at critical levels. We've lost, especially on the US 500, we've lost the 200 EMA here, and it seems like we'll be going lower and lower and lower. Now, this is not to say that we can't have a counter trend rally to short squeeze some of the sellers here, and there's a couple of things that I'm looking at, guys. So first of all, we are very oversold on all indicators, which means that it does indicate that we can have a bounce, and if there is no negative news this week, I believe that we can have a bounce in the stock market. One level that I'm looking at, especially on the S&P 500, is very interesting here. So we've taken out the lows, the weekly lows and the daily lows. And one level that I'm looking at is this level here. Can you see here on the weekly how we've on the 2nd of November of 2022, when we opened up the week here, we opened with a big gap. Okay, so let me show you here. We opened with a big gap here, guys, and then since then we've just rallied and rallied all the way to new highs, to all-time highs. Now, this gap here was never filled. Normally, when we get a gap, they always tend to fill it before going in the desired direction. Now here they haven't filled that in. So what I'm looking for this week, or perhaps in the weeks to come, is for the price actions for this gap to be filled and then to have a counter trend rally here. This can happen this week or in the next couple of weeks. It can happen either this week where we have a rally and then they come and fill in this gap, or they can fill it in at some point during the week and then rally up. It should be quite interesting to see. Now this gap here bodes in well with the lower expected move for the week here. The lower expected move is slightly lower, so it would be nice for it to come here, fill the gap, and then rally. So guys, if you see some consolidation at this level here, then that's your hint to buy. Now where are we targeting in terms of how high we can go? Well, let me show you a couple of things here, because what I'm looking for is I'm looking for some liquidity to be taken and to be created before we have a big dump. Guys, we still have a lot of negative news, so don't think that even if we have a rally we're going to go all the way to all-time highs. I don't think that will happen, guys. The levels I'm watching, especially in the S&P 500, I'm looking for the liquidity to be taken either above those levels here and perhaps those levels up here. Now what I'm targeting, as you can see here, is quite easy to predict when are we going to have a bounce, as if we manage to have a close above the 20 and the 50 EMA, well, that's, you know, we break the 20, we break the 50, that's resistance. That resistance should become support, and then we rally up. What I'm targeting either this IC here, this, you can see it even better. No, it's not. As you can see, so it's either this 4-hour IC here or this 4-hour IC over here. One of those two, guys. Okay, it's either they want to short squeeze even more sellers and they want to make it all the way up here, or they want to come down here or consolidate, and then we start to see new lower lows. Those things I'm targeting. I believe we can go as high as 3900, but not higher than that. So the top will be 3900 and then a big dump into year end or 2023. So something to watch out for, guys. We've taken out the lows from last week as well, and we've taken out the lows from Friday as well. So it does make sense for us to rally now. Either we're going to go down into a Monday session, or we're going to go straight up. If we do go straight up, guys, it will bode in well with the VIX, with the big dump in VIX. So watch out for that. Next we get the UK 100 here, guys, and again here we've lost the big 200 week EMA here, the ones that we've been acting as massive support over the last couple of weeks, since 2021. Now what I'm looking up on here, guys, it's, you know, we do have this 8-hour IC here, and we have, look at this level here, look at this liquidity level here, look how clean this level is here. Normally when we get the liquidity levels that are so clean, they always target those before going in the opposite direction. So what I'm looking for, either for price to either come in this 8-hour IC here, then we have a big rally to clean up this liquidity resting up here, and if we zoom in even better here, we have a nice, look at this, look how clean this is. So I'll be looking for price to clean this area of stop losses and then come into this 1-hour IC here, and that will bode in well with retesting this trend line here. Yeah, with retesting that trend line up here as well, the narrowing channel. So something to watch out for this week, guys. I think we can see a rally in the UK 100, especially as the UK government just reversed the controversial tax plans. I think that will hold in well as well. We also have positive divergences that are building up here on the 8-hour time frame and the 4-hour time frame. So I think the UK 100 can see a big rally this week or in the weeks to come. Next, we got the DAX 40, and exactly the same situation here, guys. I'm looking at, we've just cleared up. So today we just cleared up the liquidity that was resting below those levels. This was a nice clean level here. They cleared that off, and I still see a big rally here, retesting this narrowing channel here and coming into this 1 hour I see here. I think this is a nice level where we can perhaps consolidate and sell into and target new lower lows. What are we targeting? We are targeting the 1 week IC here, sitting at around 11,000 or so. So it will be a nice sell from here if we do make it at some point this week. So watch out for that. Again, guys, we are at extreme levels. Okay, everyone is selling. You don't want to be selling at the bottom, guys. You don't want to be selling at those levels here. Either you sell at the top or on any pullback, but you never sell at the bottom. At the bottom, you are looking for buying opportunities, and that's what we are looking at this stage. We are looking for, if you're looking at a 2-hour time frame, look at it, the 20 and the 50 EMA, big resistance. Now this resistance will be cleared, and it looks like it's the 20 is just been clearing now. If you see the close above the 50, now we haven't seen that for, well, a long time. Okay, we haven't seen that actually at all, unless this was a fake out here on the 21st of September. So if we do see a close above and then we see continuation, then that's your clue that we are going higher. Okay, we are going higher. We have positive divergences that are building up here, so a lot of reasons to go long at this point, guys. Okay, be prepared. Don't make the mistake of selling at the bottom, please. Don't do that. In terms of the US 30, exactly the same thing. Now we've been targeting this level here, the weekly IC, the 1 week IC, at around 28.5, and we are just about there. We closed below the 200 week EMA. Again, this is very negative, this is very bearish. However, I can see us retesting or testing 200 week EMA. And this acting as resistance, and if we are to test that at some point this week, we have a nice 8-hour IC there, so we have plenty of liquidity resting there. Okay, and a nice IC, an 8-hour IC where the price consolidates. I expect us to have a nice sell position and then make it all the way out in this weekly IC. So that will be something to watch out for again for this week. Next, we get the US 100, and exactly the same thing here, guys. We've been targeting this 1 day IC at around 10,600 or so, and we are getting very close to it. We are also looking here for some buying opportunities. Again, it's exactly the same situation, guys. If we manage to get a relief rally, I'm targeting this 8-hour IC here at around 11,850 or so. If we get a consolidation here, then perhaps we can sell and target new lower lows on the US 100. Again, there's so much negative, there's still a lot of negative news out there that unless they decide to lower interest rates or stop interest rates, I don't see how we can make can aim for all-time highs or even highs that we had in August. Okay, it just doesn't make sense, guys. So, okay, so don't go targeting crazy levels up there, because that's not going to happen. Okay, not unless some positive news comes out of the Federal Reserve. Okay, and the economic news that we get this week and in the next couple of weeks. So look out for some buying opportunities. You can see the 20, the 50 here, big resistance. Once we clear that, then I can see us going up higher. Okay, target either those levels, okay, or okay, it will be quite nice to happen, but I'm not sure if you manage to get up there to clear and to fill these IPAs here, the ones that occurred during the Fed meeting. Remember when with the Fed meeting? Since the Fed meeting, we've been dropping crazy. Okay, so it'd be nice to fill in those IPAs here and come into those ICs. If we do make it up there, okay, that's what we sell. Okay, that will be a big sell position, guys. But I'm not sure if we're gonna make it there either this year or this month. It's something to watch out for, but I'm not sure if it's going to happen. Next, let's look at DXY and look at this, guys. I've been talking about the 115 level as being the market, the DXY, the top of the DXY. And guess what? We go to 114.9, and then we started dropping. Okay, so I was close enough. I still think we can make it up here, and that will be the top for the year, guys. I think we had the dollar is way overextended at this point, and we are due for a pullback. And you can see here on the weekly, we are way too far away from the 20 EMA. So I do see a play where we can drop in and around the 20 EMA, and then perhaps go and make it back into next year. Okay, see new highs into next year, not this year. And that will bode in well with the drop in the VIX and a rally in the S&P 500. So that will help the stock market. If we see downside in the DXY, we have the stock market to rally. Where can the S&P rally? To around 13,900. That's the level before the Fed meeting. That's where we dropped from. And unless there's a policy change, then I don't see a lot of upside in the stock market and a lot of downside in the US. Okay, at the moment inflation is too high. They have to raise interest rates to get down inflation, guys. Next we get gold, and guys, we smashed this analysis. I'm so proud about this. I've been talking about this weekly IC here, and I did mention, I said that if we are to lose this level, then we're going down all the way down to 1580. But guess what? We've held this level beautifully. Look at this. Look at this. We've held this nicely. We cleared the liquidity that was resting below, and then we held this level beautifully here. Now, all this is saying here is that it's saying that we can perhaps have a rally trying to clear the liquidity that is resting here and come into either this daily IC or perhaps this daily IC here coming around 1785. So I do see us, if we manage to clear the 20 daily EMA, I do see us going all the way either here to around 1716 or perhaps all the way to 1785 or so, guys. And if we do see a drop in the dollar, which I'm expecting to see, then gold can have a ticket to rally all the way to 1780. And then at this point we have to reanalyze. Either we place a sell position at this point if we see consolidation, or we go and take those highs here and perhaps we rally to new highs. We have to wait and see at that point. But I do see a lot of upside in gold if we do, especially as we've held the weekly IC and as the dollar drops. Lastly, guys, Bitcoin, and here there's just no liquidity whatsoever here. There is no bids. No one is trusting Bitcoin as it stands, and it's just, this looks to me like it wants to drop lower. Where lower? All the way to 12.5. We've been targeting this level for a long time, and it looks like it's looking to get down there. We still have the double bottom that's still in play as long as we don't drop lower and we manage to close above this level, which will take us to around this daily IC here, where we're looking to short. But as it stands, there are no trades to be done here, guys. There's no liquidity whatsoever. We've just been gliding sideways here, and it's just no one is buying here. No institutions are buying this at this level to push up the price. And I wouldn't be surprised as Tesla announces their results this month to see to see that they've sold more Bitcoin. I wouldn't be surprised if that happens, guys, because this happened here and we've made a video about this. If you haven't watched it, make sure you go and watch it. This is why Bitcoin has dropped at those levels, because Tesla sold 75% of their holdings, of their Bitcoin holdings, and I'm not surprised if they did sell some more, perhaps here or here. I will see when the results come out. That's it from me this week, guys. Thank you very much for watching. If you haven't done so, please make sure you like the video and subscribe to our channel. And if you are new to trading or you've been trading for a while and you are struggling to being profitable or consistently profitable, then do head over to our website, mcitradingacademy.co.uk, where you can find out more about the trading courses we offer, and inquire if you need to do so. Thank you very much, guys, and I hope you have a great trading week.